Forex market, welcome back ladies and gentlemen. Monday morning, opening up the week. We're looking at the New Zealand dollar. Just to refresh your memory, we've been bullish here on the long-term perspective. We've been bullish. We figured out that price after hitting that huge 59.14 level right here on the bottom, that was the move, right? It was a V-shape type of touchdown. It was a big reaction here, especially when you look at it from the monthly perspective. Big key reversal spike, that's how we call that, and that's a huge indication that the major trend is shifting from a downside trend into an upside trend. Check this out. This is how it looks like from the monthly perspective. That's the big definition, that's the day price shifted from a downside trend, which lasted for more than 2 years, by the way, and now it's on the upside. So that's just the general picture, right? We know there was a big turning point around at the beginning of 2020, but now what we're looking at is the fact that price had been able to break 65.41, and it did that with a monthly closeout confirmation, right? So that's a good sign. So this is what I'm saying. From the long-term perspective, we've been bullish. We're still bullish. All right. We think price could hit 72.43 in the next few months, probably, right? 2, 3, 4 months. Hard to say, but in the foreseeable future, and then possibly even take it further towards the previous high, the previous major high, which is around 75.50. So it's a big move, right? Potentially speaking. However, there's a bit of a conflict between the long-term cycle and the short-term cycle, and that's why we wanted to land here and tell you all about it. Because, we have to consolidate the long-term cycle and the short-term cycle. We have to bring them together. Otherwise, this conflict is going to cause trouble. So what we would like to do is actually jump temporarily, right, to being bearish on this one, because the technical situation coming from the daily chart suggests that this blue system, you see this blue trading range representing the short-term cycle, is probably still active, is still valid, because price landed right, it just closed that last Friday, right back below 66.31, and that's very suspicious. Now, I'm going to tell you all about our suspicions here, because we feel that this suggests that the short-term cycle here, this short-term sideways movement is still active. So we'll have that drop back to the lower section, possibly even taking the previous low here, maybe even flirting a little bit with the 200-day moving average. Is going to be around the area, but then it's going to come back up and possibly maybe continue to trade sideways for a while, by the way, but eventually we think it's going to break up, right, according to the long-term cycle, as we've just mentioned when we looked at the monthly chart. But immediately, right, right around the corner, it looks like price is going to have a bit of a trip downwards towards 64.27, and we would like to reflect that potential and express that in our positioning. So we're going to activate a quick short-term downside move to 64.27, activating, establishing a short position, and we're going to try to chase about 200 pip. Now, the only reservation we have here is, of course, price coming back and crossing back above 66.31. All right, that will definitely deter, our intentions here. We're going to start small now. If price will confirm that breakdown by just pushing downwards, just continuing to building that negative momentum, we'll start to increase the position. If it's going to turn back up, we'll consider closing it out. All right. Yeah, that's pretty much the game plan. All right. We think we're going to have a bit of a dip here, but then later on price will come back up and we'll just switch right back to the long-term perspective and being bullish again. How about that? There you go. New Zealand dollar will be back soon to follow up on the situation here. There you go. See you in the next video. Take care.